Good day, everybody. Well, I'm looking for a selling opportunity on the Aussie New Zealand dollar. I'm looking for a buy on the Euro Aussie. We are just not there yet. I'm just waiting for a break, and I don't know what the catalyst will be. But I've been waiting so long. I kind of get the feeling that we're pretty close to getting a bit of a breakout. So I am lightweight at the moment, and I'm just waiting for those follow throughs to occur, so that I can start basically shorting the Aussie basket.
Check. Just wanted to make sure sound is coming through. Good. You know, it was interesting when so I have it playing in the background, and I could hear Tien when he was talking, but for some reason I don't know if I hear you. Yeah, I don't hear you. I hear Tien though. Yeah, strange.
Tyson's got sound. Okay.
All right, we should be good here, traders. Give me a quick wire. Yes, if I'm coming through now, I should be coming through now with a new microphone. Oh yeah. There we go. I think we're good now. All right, so Tion Tyson should be good for me. Yeah, it was just my little headset. All right, we got it. We got it. Man, this streaming stuff is no joke. All right, we should be good on AV now.
I was blaming on Gary. I'm like, Gary, why
I
aren't you
know.
ready?
I
This
know.
is this is super simple. We do the same thing every week.
I know. Well, I will say, like, I don't know if Gary's like changing from one service to the other, but I did that this morning. I had my own stream session, so I have my own sets of parameters and inputs, so we should be good. So officially, let's say everybody, hey, welcome to AAA session. Tian was talking. He's got the Aussie basket. He's really interested in looking for some Aussie weakness to kick in. If you can see our charts here, the Aussie New Zealand looking for a sell trade, Euro Aussie, Euro New Zealand looking for a buy trade. Tian, what are the levels you're liking? Let's go through like the Euro Aussie. What are the levels you're liking on Euro Aussie?
I'm just waiting for a trend line break to the downside, to the upside. Sorry.
Yeah.
I'm waiting for that counter trend line to be broken. If you could just open up a chart there.
What
There we
time
go.
frame? What time frame you looking at?
Yes, that daily chart is looking good.
Yeah.
If we can get that trend line break, I know it's going to be a long wait, but I don't want to call it top if I don't get confirmation, because this market just carries on going without stopping. I'd really just want to wait for confirmation.
Yeah. It's interesting you say that because we have done the same thing. So so this yellow box you see on my chart, and I talked to Tian about this beforehand. So I have my little robot trading, and it's basically trading in this area. So what I had initially deployed was confirmation on the 1 hour chart, and that first entry was right around 5550 or 5500, and it's then been spaced out. So currently we're trading around 5360. I told traders that, we might stretch this down a little bit lower. This might end up falling into like, I'll say kind of worst case scenario, like 5,000. Tyson made a great point before we started the live session today. This feels a lot like February and March of last year, right? Like the highs and lows kept pushing, or when we started to see the big correction when the stock markets were selling off and volatility was going crazy, like end of February, early March, you started to see just these really huge one-sided movements. Now, granted, we don't have nearly the amount of volatility that we had last year at this time, But as far as what we've seen for trends, the Aussie has been resilient. The Aussies remain stable. The Aussie remains stubbornly strong. Now, again, that makes a lot of traders uncomfortable if you've gotten in too early, if you've over leveraged on your sides and positioning for the Aussie pairs. If you're riding the Aussie long, like that's great, but there's no setup that I'm personally looking at that would be technically still bullish on the Aussie. Like at this point, I would be protective of all my profits on Aussie pairs. I would be using trailing stop losses. If it wants to keep running, great. But Tian, Tyson, any thoughts on if traders are in right now, what do you have to say to them? And if traders are waiting, like Tian said, wait for confirmation, what are the time frames and alignments you're looking for? So again, floor is open for both you guys.
So I'll say I'm in the same position, and it's difficult for some that haven't been through something like this before. Because here's the question I'm getting from students. So I'm in short Aussies, and I'm in looking for bullish moves on three main pairs, which is the dollar, the Swiss, and the yen. So I'm looking for more of a risk off type of move coming. That obviously isn't happening right now. Now the question I constantly ask myself, and I think this is really, really important for traders to do on a weekly basis, maybe sometimes a little bit sooner. Step yourself outside of the current position you're in, which is tough to do sometimes, but take the emotion of what you're currently in out of it and ask yourself, what would you be doing right now?
Yes.
The answer is, I would be in the trade. I would be getting in right now. Then stay in. If the answer is, well, you know what? I wouldn't be in this trade because I think we're going, for example, on the Euro Aussie. I love the buy side. But if you see reasons why we're going to push a little bit lower, maybe we're going to go to 52, 52.50, and you're convinced of that, then don't get in yet, but have a plan to be able to get in. Maybe you say, okay, well, I believe I'm going to use a demand level. I think we're going down to 52. But if we don't get down to 52, I will then buy on that break of the upside trend line. So you have a plan to get in. But if you're already in, like I am, you have to ask yourself, what would you do right now? Number one, there's no way, and there's only three things we can do. Would I buy right now? So on the Euro Aussie, would I sell right now? Nope, absolutely not. Would I buy right now? Yeah, probably. Is it technically sound to buy right now? Well, honestly, I think what's best to do is wait for that confirmation and wait for a confirmation of buying in some type of demand or some type of support, or wait for that trend line. But you got to constantly ask yourself, what would you be doing right now? So if you're in the trade, if you're over leveraged, and so this is the indicator that I use all the time. If I can't sleep, if I'm losing sleep because of any one or parts of a position, I'm doing something wrong, and I need to, if I still want to be in the trade, but it's costing me sleep, I need to take off some of the trade and take some of the loss, and then and lower my trade size.
Right.
If I'm not losing sleep, then guess what? I'm going to stay in the trade. So that's the way. So I'm staying in the trade. I'm not over leveraged. We're going to eventually get the turn, and I refuse to be the trader that gets panicked out of the trade only to watch it go my way.
Yep. Agree, and that's I mean super well said. And so anyone that has look, I'll say that traders can honestly walk through that with us. Like I mean, and I feel bad like having to go into a trading room and we are like rationalizing why we're still in the trade. But Tyson said it perfectly when he said it's what would you do right now. If you take your own trade out of it, whatever position it is, you can take the emotion out of it, take the trade away. If you looked at it from a clean lens with a fresh objective, what would you do right now? And everything I'm looking at for the Aussie. And so Ushi was asking, what else? Is it just a trend line break? No. I mean, the Aussie is overbought on multiple time frames. The Aussie is oversold on multiple time frames. The Aussie is showing tons of divergence on multiple time frames, meaning that price and momentum don't agree. So yes, that might be a little bit early as far as anticipating when we're going to see some turns. But the reality is when and if those tops and bottoms are in, we will see some really good direction. And, if we're in early, like I am, like Tyson is, or if Tian's waiting for confirmation, that's great. But at least we know that we have a plan from now until the next trade. Like to me, the next trade is looking for Aussie weakness. Now, is it going to be a full-on risk-off move? I don't know. Is it going to be super aggressive on Aussie weakness? I don't know. I mean, we don't know. But if you're looking at it from a clean lens, that technical outlook for me, and just like Tyson said, that technical outlook is I would be looking for ways to participate either now or participate very, very soon with the right alignments and confirmations. And that could come from, a smaller time frame, being a little bit more precise on a smaller time frame, looking for entries. So, look, this is going to be a full trading week. This will take us into the end of February. So as of Friday the 26th, that's going to be the last trading day of February because the weekend is going to wrap up on Sunday, or the weekend on Sunday the 28th. That'll wrap up the month, and then we kick off a new month. So it'll be interesting to see how, transitioning into March and that Q1, like March is always the end of Q1. So are we going to keep pushing the same direction? Are we going to have some turning points to start out the end of February, early March? We will find out this week. And so, Tyson, I know you always like to talk about daily closes and weekly
I was
closes.
just thinking about that,
Yeah,
Chris,
go
and I
ahead.
look at this chart on the Euro Aussie, and I think one of the clean ways to get in. Now, you would have gotten fooled once back at about February 9th. You could have gotten fooled and you'd be going through a drawdown if you use this. But eventually, a turn is going to happen with a couple different attributes. One of those attributes is we're going to have daily closes above the prior day high. That's eventually when that starts to happen on a consecutive basis, that is a signal of a turn happening.
Yep.
And so, what you could do to try to get in early, but not too early, is wait for the next daily close above the prior day high. So, as an example, today, let's say today's high is in. Today's high is 54.10. If tomorrow closes above 54.10, that could be your first indication that, because that's what's got to happen, guys. That's what one of the first things that's going to happen for us to get a true trend reversal. So if that happens, that could be one of your early reasons to get in. Now it's not perfect, but it also helps you create a plan. And what that also allows you to do is, if price continues to fall, you're sitting on your hands until you actually get that close above. So
Right.
it's a good way to be patient, be disciplined, and then get in on a potential shift.
Patience is a virtue. If you draw on the daily chart, Chris, if you draw an auto Fibonacci from that highest significant turning point, you'll see that there's a 1.618 Fibonacci de-extension at 51.73. So getting in now and the market moves against you, it's more than likely going to come back then and hit that Fibonacci de-extension. You need to compress that chart a bit more there,
Okay.
Chris.
Do you want me to go even further back, like starting from last year's high?
Yeah.
Oh, wow. Okay. Yeah, no problem. Good.
So I would absolutely, manage my risk in such a way to put any stop losses below
Perfect.
51.73.
Yeah. No, that's great. That takes in, that's obviously a much bigger swing than what I just looked at. I was looking at the last like 5-6 months. But Tion could be spot on with this thing actually going from high, low, lower, high, lower, low. And that type of de-extension right there, if we hit it, looking left on that chart, there is still so much support from back here. Like all of this, previous structure, all these previous lows. This is what I was looking at right in here, which is why I was starting to get in this yellow box. I thought, you know what, I might not time this perfectly, but if we get some small entries to anticipate this trade, I think we can at least have a jump, back up towards 1.60. The reality is for me, it's like, getting some entries in now in the low like 50s. If we go from 53 down to even 5,000, if it gets there, taking this back up to 6,000, you're talking about a 650 to 1,000 pip move back up towards an easy level of past support resistance. So it's, again, if somebody's looking at it right now and asks like, well, that's crazy. Like you guys are essentially calling the top or bottom. It's like, yeah, what we're looking at, how much further does this actually go? Right? And it's one thing, like this isn't the stock market, right? This is Forex. Forex, you have a lot more liquidity, you have a lot more efficiency. When the markets get overstretched and bought and oversold and super extreme, almost to the point where it's silly, that's when you see that it actually does respond to a top or bottom. That's when it does have some flush out move where, again, worst case scenarios, we see like some type of flashy move here where it's a long wick or high volatility, and then we see those tops and bottoms, those reversals. I don't know if we're going to have a flash crash. That's never in our control, but trade size is. So if you're in early, the trade size has to be small. If you're anticipating, wait for better confirmation, just like Tyson talked about.
I agree.
Real quick, one thing too, I want to just make sure is clear is that I actually am a fan of trying to pick tops and bottoms on small size.
Correct.
You look back in history and you look at some of the greatest trades, hedge funds, Warren Buffett, anybody in the world has done. They buy bottoms.
Yeah.
They
build off of bottoms.
And that's what I'm saying. These and professionals are the ones that actually turn the markets. And so, yes, trading with confirmation is important, but I think there's a lot of to be said about trying to pick those tops and bottoms, but doing it in a small size, obviously, because if you're wrong, and so I always go in, and this kind of makes maybe me sound like a fool, and some people maybe don't understand this short term, but over time it makes sense. I sometimes in fact, oftentimes go into my trades and expect my first entry to be a bad entry.
Yeah.
I don't want it to be, but I go in with the expectation of like, hey, this might not be the greatest entry, but I'm going to leave plenty of dry powder on the table to be able to add to this, because I know, especially in the currency markets, that's what's great about it. It's an oscillating market. It's going to go to extreme lows, and then it's going to go to extreme highs, and then it's going to go to extreme lows and extreme. And as long as we know that, and if that doesn't change, if this time isn't different, then trying to buy these bottoms is eventually going to work. But you got to be patient, you got to be disciplined, and most importantly, you cannot over leverage any one or two trades. And so that's really, really important. Another currency that I want to talk about when we're done with this, the one that is by far the most overextended. When it comes, I've never seen anything like this, to be honest with you. We have 5 weeks in a row of a negative money flow expectation on the pound yen, which is nuts.
Yen,
but
okay.
we could talk about that in a little bit. I think Tian was going to say something.
Tian, you want to take us through so Euro, Aussie, Euro, New Zealand are both similar trades, right? Like look for trend line confirmation, very similar turns on those. Let's talk. You want to talk everyone through the Aussie, New Zealand, and then we'll go to pound yen with Tyson.
Please.
Yeah, let's go Aussie, New Zealand.
I think the Aussie NZD gets me very excited.
And so give me down. Well. Yep, give me down to a time frame that you're looking at with traders.
Okay, well, first of all, open up a weekly chart,
okay,
and then we'll move to a daily chart.
Okay.
I just wanna give you a little bit of context on that weekly chart.
Yep. So you'll see this pop up here.
Okay.
So walk me through it, Tian. You'll see it. Yep.
Okay, so where we are at the moment is a bearish head and shoulders pattern, and if you draw a trend line from the low of the range that you have there, then it will just connect the two higher lows. Then you will see that a counter trend line's been broken to the downside, and the left tip of the shoulder, the left tip of the crown, the center tip of the crown, and the right tip is actually on the outside, the right side of that counter trend line. You see the crown there?
Yeah, I see what you're saying. Right there. So this level, we broke this trend line. So I think this is the crown you're talking about, right? So left tip, center tip, right tip. And you're essentially looking for that right tip to be forming. The high is your swing. And then you're looking to see if this will play back down.
Because the right tip's already been established.
Yes.
Okay. Now at that right tip, I can't see the screen. It's not updated on my end. But nevertheless, at that right tip, if you go and change this chart to a daily chart, then that right tip is another bearish crown.
Correct. Yeah, I know.
Just been established the past couple of days.
I know exactly what you're talking about. So what Tian is saying is this: there's a low, there's a low. This is the crown that he's talking about right here, and then there is a low and another low, and there is another crown right here. So basically, you have a bear pattern and another bear pattern, and although this is a deep right tip, we're still looking for a chance to enter in and trade this back down and have this be an A. Okay, B.
Right,
yep. There's a B, and this is the C that Tian is talking about, and then the D would be finishing down here. So A, B, C, D, and you have another bearish pattern, which I in fact, it's perfect that you mentioned this, because from my context of the Aussie New Zealand, I think that this pair for the last 5 years has stayed incredibly sideways. Like we've had some great runs from 1.00 to 1.14. We've chopped around for years and years and years. Now, I'm a big fan of this pattern that you just mentioned for this reason. I like this low to this high. And if I did an X, A, B, C, D, Tian, you can get the crown that you're talking about, and I can end up getting a weekly harmonic at these lows around 1.02, let's say even back down to parity, and we can take that trade back up. And this, for me, it's the context of, in the last 5 years, where's this pair gone? Nowhere. It's been sideways, right? From 1.0 to 1.44. So Tian can be spot on with his great swing trade to the downside, and we can all take that. Like, I love that trade because I've said, from 108, I like being short, and I want to see if we can get filled back up around 103, 102, 101. So I'm looking at this from, same thing, high time frames, low time frames, but we've talked about this a lot. And in fact, it's funny, like, Tian, you're on the same page. Tyson, you're on the same page. Gary, myself, like we've seen this trade the same way, where this means something. You know, the market taking out that low means that we have a nice little crown pattern. This recent pattern as well could be another pattern. Now, it might not be an exact right tip. Maybe it comes up for a double top, but it's still looking for a smaller bear pattern inside a larger bear pattern. And if this plays out, that is how you form the A, B, C to D. And if we complete that D extension, that to me is where I'm looking at, you know, again, we can take the ride all the way down here. We can take this ride for a ways, right? We can take this ride all the way down here for 400 or 500 pips, and then we can get some buy trades and take it back up into maybe a 300 to 400 pip recovery. And this is nothing more than just like solid structure in the market. Like Aussie, New Zealand, for all intents and purposes, they're basically the same currency pair. You know, I mean, you don't really see the Aussie and the New Zealand separate too much. If the Aussie is strong, the Kiwi tends to be strong as well. If the New Zealand is strong, the Aussie tends to be strong as well. Like there are subtle differences in certain phases of the year, but really, you know, it ignores sentiment because it's Aussie and New Zealand. It ignores what the dollar's doing. It ignores what the yen is doing. It's like, this is what I love about it, is it doesn't matter what the stock market's doing. It doesn't matter what the yen is doing or the pound is doing. Like this to me, I've always called this like the what is it? Like the what I had a phrase for it last year when we were talking about like Brexit stuff. This is like the trade that has like the blinders on. It doesn't pay attention to anything else except what it is supposed to do, and that's why I love this pair for the technicals. So I think that's a great setup, Tian. So how are you having traders follow you in, you know, Analyst on Demand or your sessions? What are you doing for a potential entry on the Aussie New Zealand? What do you like?
Okay, well, I'm already short. The directional bias probability on the weekly is bearish and the daily is bearish.
Okay.
I want to deploy my automated systems in a bearish capacity, but I'm waiting for one thing, and that is the directional bias indicator that I use in the Analyst on Demand.
Okay.
So I'm just waiting for that one to move below the median line to show that the momentum is to the downside, and then I'll just turn to my virtual private server and deploy my systems in a bearish capacity.
Perfect.
That's it.
Yeah.
I'm not gonna go for a technical trade. I am simply going to start looking for buying opportunities again.
Awesome. Good. Yeah, that's a great setup. I love that setup. And again, for more details on that, follow Tian and Analyst on Demand and see what you know, indicator is looking at, see what the time frames are, and you know, you can deploy systems right alongside of him for that D extension that he's talking about. Tyson, let's go to the pound yen. Walk me through your pound yen.
The pound yen is just, I'm going to keep it really simple. It is just like all these. I mean, it is extremely overextended, sitting at massive levels of resistance at this point. It was supply. A lot of that supply has been sucked out. So we could go up a little bit higher, but it's going to be very difficult for price to just break through this level. Here's a fairly high quality, what I think is a pretty high probability trade if we can get up there. I think I like trying to get in at or near this level, but I think we could see a push up to, just based upon kind of some supply and demand equations. I think we could get up to 50-50, 150-50.
Okay.
And so my trade would be this. It would be look to sell at 150-50 if we get up there. Put a stop, and I know this is a wide stop, everybody. So obviously, you know, deploy automated strategies, find ways. So my sell zone, I'll call it, would be between 150-50 and 155-50. So 500 pip range as my sell zone. And my target, I believe we're going to head down to 140. So I think we have 1,000 pips to the downside, 500 pips risk on the upside. Risk to reward makes sense, and probability tells me this thing is absolutely due for a turn.
I like it. So, and you know, like Tyson's mentioning here, that, you know, having that 500 pip range, it doesn't mean that you're selling it at 150.50. I mean, if you have a system that is looking to confirm bearishness, you know, price might continue to go until like maybe 152, 153, and then it starts looking for confirmation, starts to get confirmation on those smaller time frames to get you in somewhere in that range. So, you know, I know that Tyson and I see the market in a very similar sense. You know, I would do the same thing. Price Action Pro, we've already considered looking at some sell stops below certain prices. This is the type of setup I would set this one up for, a resistance window, where this would be from this level to this level, and start looking for confirmation on the smaller time frame and space my way through it for a couple of add-on trades. And again, you know, we're talking about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is 11 weeks in a row of, wicks
Great.
to the south and pushing to the upside. We're getting this is a weekly chart, by the way, a weekly chart, and we are nearly into this. Hardly ever happens with a relative strength that is nearing the overbought condition. This is using a 70 and a 30 on the relative strength. This is a 21 period RSI that I'm using. I barely ever see weekly charts hit those overbought, oversold levels. So, I mean, again, it's like it's crazy. But
I think you could keep it really simple. I
Yeah.
think you could use any of TN's auto strategies, any of yours, any of my Turning Point Max, doesn't matter. I think if we hit 150.50, turn on an auto strategy that confirms on sell only and just keep it on. Do I think we're going to go all the way down to 140? I do. But obviously, if we get to 146 quick or we get to 145, I might adjust what I'm doing. But I think you can keep it in those ranges between that 150.50 and 155 level. I think you can keep it on sell only, be pretty confident, let the strategy do the hard lifting for you, and probably generate some nice income over the next few months.
Yeah. If you open up a daily chart and you draw the auto Fibonacci from the lowest significant turning point, you'll see that we recently hit a de-extension as well. So it is extremely overbought and due for a retracement.
Absolutely.
Definitely. 147.39, Tiana, does that sound familiar? That de-extension?
47.39, that's correct, yes.
Exactly. So we hit that de-extension. So look, let me go ahead and since we don't have the confirmed top yet, let me go ahead and anticipate that next swing with the Fibonacci. So this A, B, this would be our C. Let's go into this week. And let's say that we start to get the reaction of the de-extension. The bulls right up here scoring a point above that high at 148 and change. If we pull back to a 38%, we're talking about a move back into 142. That's almost 600 pips away from current price. So this is a big opportunity.
Exactly where I would start to. Yeah, I think that 140, that 382. Obviously, I'm not going to try to squeeze out another 200 pips. I'll probably adjust there, but I do think we'll hit 140. But yeah, I'll start adjusting there.
Yep. And I love that, I know Tyson had mentioned like the 146 level. I mean, this breakout right here is at 145. So even if we start getting levels at, 140, let's say, again, let's let Tyson map that out, 150, 150.50, I would love to be short, in this area with confirmation and take it down right there to 145. That to me is a very obvious level that price should safely come back and find. Yep. I love it. Okay, gents, let's switch over to, what is it, 127? Let's go like another 8 to 10 minutes or so. Let's switch over to some cryptocurrencies real quick. Tyson, any thoughts over the weekend? I saw that we hit 1 trillion market cap on Bitcoin. Look at the volatility from today, nearly 58,000. And then we had a huge sell-off today towards 48. I mean, you dropped $10,000 today. But again, look at the candle, look at the price action. There's obviously a lot of volatility. Those that have been trading cryptocurrencies and are comfortable with it understand that there's going to be a lot of volatility. Bitcoin should be pulling back. But Tyson, your thoughts?
Yeah, it's Bitcoin is overbought for the short term, maybe medium term. Bitcoin is an absolute steal for the long term. What people don't really understand, so the mining cost right now for Bitcoin is right around 20,000. So that's what it costs to mine a Bitcoin, and that goes up as more miners go into the markets and more the difficulty goes up and all that. And it's just it's a perfect supply and demand equation. But what people really don't understand is that Bitcoin could do nothing. Let's say nothing changes, and by 2032, it's going to cost like $400,000 to mine a Bitcoin. Like it's got about a 30% compounded rate of return without any intrinsic growth in demand or anything like that, just based upon the mining cost and the halving value.
Yeah.
So Bitcoin's going to 1 million. Bitcoin's going to 5 million. Bitcoin might be going to 10 million, 20 million, 50 million. Like how high could it go? I don't know. In 2080, we could be talking literally about a $25 million Bitcoin. I mean, that sounds crazy, but again, just the math. It's just math. It's just simple supply, demand, and we're going to be once we create. If there's only a half of a Bitcoin every day mined, and the 60% of the world is using Bitcoin, what is the value of that? I mean, right. Think about that for a second.
Right.
So you can't even put a number on that. I mean, I have no clue how high it could be at that point. Because a lot of those won't be out there in the world transacting. Heck, only maybe 20% of them are. The other ones are being stored as value. So like the numbers could be off the charts. But I'm actually interested, real quick. I'm actually interested in some of the cryptos that were these amazing rainbow butterfly unicorn cryptos in 2017 that haven't quite gotten the love yet. And I think this next run could get the love. And I've got two that I like that I'm keeping an eye on. One I just bought today, EOS. It's a platform. It's thrown out of grace. I think it's one of those speculation plays. It's either going to be, I think, catch a great bid. It hit about 22, 25 in 2017. It's trading at like $3 or $4 right now. So it's not even close. As the other ones hit their 2017 highs, that one's still underperforming. And then another one that I love, absolutely love, is Lisk. I've been a big fan of Lisk. It has absolutely way underperformed. It's traded about $3.50 now. It hit a $35, $40 high in 2017. The reason I love it is because it's a platform. It's kind of like an Ethereum competitor, and they are sitting on approximately $150 million of cash in their development pool to be able to hire developers and create this platform. Long-term play. I think it hits its 2017 highs. If it becomes what I think it could become, it could go even 10 or 15, 30, 50 times higher than that. And you're buying it at 350 with the potential upside of 500, 1,000. Who knows?
Dude, that's Lisk is crazy. Like the fact that those 2018 highs are $40 trading at $3.
And it's still
that's
holding
nuts.
$150 million of assets.
Okay.
It owns, the Lisk Foundation owns 2,400 Bitcoin.
Wow.
Yeah.
That's amazing.
All right. That just looks like for me, I'm going to add a little bit more to my. I'm in 8 coins right now, and these two I have not played. Lisk, I definitely am super interested in. I like that a ton. And it's funny because like Ripple to me has the same thing where it's like I look at the 2018 highs. That's what matters to me. It's like, can it get there? Absolutely. If I put a finite number in it right now, what does that look like if we hit those highs? Lisk is the same thing.
That's a really good play. You find those coins in the top 100 that have been around since then, that are still well off of their 2017, 2018 highs, and just putting a little bit of speculation plays on those. I think there's a really good probability all of them at least get to their old highs.
Yeah. I think that's awesome. Tyson, in your Ultimate Crypto course, did you actually, I saw that you shared out a little portfolio update. Were those two included? Yeah. Okay.
EOS was. Lisk was not. Not because I don't like it. I want it to be included, but I'm sticking to only Coinbase coins.
Got it.
Unfortunately, it's not in Coinbase. But if you have Bittrex or Binance or someplace else, you can buy Lisk with those two.
Yep. Love it, man. Cool. All right. So, I mean, cryptos have been super exciting. We're on the Bitcoin chart right now. What we could potentially see here, and this is what I'm interested in. Tyson's talking about the mining cost right around 20K. If we look back at this previous high right around $40,000, look, today's sell-off over the weekend, hitting the highs, everyone is celebrating the 1 trillion market cap. If this is a really, shaky candle and we start to see some volatility in here, I wouldn't be surprised if Bitcoin just kind of makes its way back down and starts to see another floor. One thing that I'm not going to say that Elon Musk is now the father of cryptocurrencies, but all he had to say was Ethereum and Ethereum and Bitcoin seem high, and all of a sudden that shortly after we follow off with a 10% plus sell-off. So, I mean, again, I'm not following Elon Musk for trading advice, but clearly there's a lot of emotional swings that he can put into the market by just tweeting on something. So
you gotta remember last time he said that Tesla stock was high, like the next 3 months it like doubled or tripled.
Yeah, exactly. No, I know. So from a technical level, I mean, I would be watching that 40K level. I still don't love the current price. Like my thoughts, and I know Tyson, you said this the last couple of weeks as well. Thoughts on traders should be wanting to wait for better prices. Should. Now, there's still the FOMO. There's still the, what if it doesn't pull back? And I said this to traders for the beginning of the year. I said, if we pull back to $30,000, it'd be a small level. That's trade 1, area 1. If it pulls back to 20K, that's area 2. If you have no investments in cryptos, I would still be looking at those technical levels. Now, as Tyson just mentioned, a couple of alternative coins, Bitcoin is not the end all be all, right? Like Bitcoin going up to new highs to 100,000, you could see some of these altcoins like Lisk, for example, at $3 go to 10. From $3 to $40. That would be the equivalent of right now. Bitcoin would have to essentially go to $500,000 to match what you can get on that return.
Yeah. That's the main goal in this crypto series. And I really want everybody to understand this. I am a Bitcoin maximalist. I'm doing everything I'm doing right now is to set myself up in 3 to 5 years to have as many Bitcoin as I possibly can. That's the
Mhm.
whole goal. But right now, there are going to be some altcoins. If Bitcoin goes from 50,000 to 100,000, as you said, list could go from 3 to 20.
Right.
And so I'm going to get much better bang for my buck in something like list. And then I'll take my profits of that and go back into Bitcoin. So right now, it's about leveraging the opportunities to ultimately get more Bitcoin.
Yeah, I agree. And who's asking a question there? Abraham's asking a question on Ripple. Tyson, any words on the Ripple and the SEC probe? So Abraham's question is, would you say it's too risky due to lawsuit against the chairman? Also, he owns a lot of Ripple. If he sells his position, that could do some crashing. Um, I'll let Tyson. What do you
I'm
think?
not as sold out. I never have been as sold out on Ripple as some others. I don't necessarily. I'm not sure, but I can't get beyond the why. I don't see the problem that it solves not being solved other places.
Hmm.
And now that it's being drugged through the mud with the SEC, I don't know. I'm avoiding it. It's not on my list. I'll tell you this. I would take Stellar over Ripple because of their partnership with IBM
Yep.
any day.
Yep.
That's just
And I had that one as well. So what's interesting is my Stellar had a lot to do with the fact that everything that was coming down the channels from the SEC, Stellar was supposed to be like a 90+% correlation to what Ripple was capable of. So I thought, well, if you give them a cleaner reputation, Stellar could be something that outperforms. And honestly, it has been outperforming. I got in Stellar around 10 cents and it's up to 45
yeah,
cents. So
yeah.
I mean, I'm still holding a Ripple position around 17 cents. And I will hang on to it for the fact that if it goes back to those 2018 highs, that's $3. From
So I
17
would much
cents to
rather you're doing
$3.
it right.
Yeah.
I would much rather have if the transactional Swift, these guys are going to take over the Swift XLM has something called the World Wire that they're working with IBM on, which is really cool. And let's say that's a huge market that I'm not even aware of. Like Tyson, you really don't even know anything about it. It's going to be Ripple's going to $589, all that. Okay. If Ripple goes to $589, then guess what? XLM's going to get a big portion of that also. I would
Mm-hmm.
rather be in the one that's not getting drugged through the mud.
Yep.
That has a massive relationship with like a $150 billion company in IBM.
Yep. I like it.
Yeah.
All right, that's pretty heavy on the crypto side. Let's take like maybe 5 more minutes. Let's talk about the overall markets this week, Tyson. Stock wise, indice wise. I saw that we were off to a bad start. Last week's unemployment claims on Thursday were pretty rough again for the U.S. We're looking at a $1.9 trillion rollout package. We potentially might roll in another ridiculous stimulus package for the U.S. Who the heck knows? At some point, and this is what we've talked about, ourselves as a team privately, but we're talking about what is the catalyst? Like, what could be too much? Where this is, this amount of greed, this amount of euphoria, this amount of rationality. I talked to a good friend of mine this last weekend that he works for an investment bank, and he's just saying that all clients right now are doing whatever they can to take on more risk. More risk, more risk. They want to buy more houses. They want to leverage, current assets. They want to buy more. They're not in crypto stuff with like fixed income, but there's so much risk that traders are willing to take. So much, risk that investors are willing to take on. I almost feel like that the retail trader and the retail risk out there could almost break the market because it's going to create these big swings where it's, I don't know, like the sentiment swings so far one direction, like we get so far off of normal, we get so far away from the reversion that it's like the better trade would just be to see a correction. The better trade would be that it's ridiculous how far we've run. And I don't know. Any thoughts on
You
that?
know what's crazy about that though? I hear you, and I'm totally with you, man. The bullishness in the market is huge, but I'll tell you, the American balance sheet is still pretty darn good. I mean,
Yeah.
we've got cash in the bank. I mean, and this is worldwide too. So we're taking more risk because I think we're finally off of the sidelines of the last 14 years saying, oh man, this thing's going to fall apart. This thing's going to fall apart. This thing's going to fall apart.
Right.
And they're finally saying, wait a minute. Now because I'm at the same place. I was like, man, I don't know I don't believe we're going to Mars. We're not going to Mars. If we're not going to go to Mars, where's the growth opportunity on the world? And I'm like, oh, I don't see anything growing. But now I'm like, wait a minute, man, technology and cryptos and blockchain and all this kind of stuff is actually bringing about this whole new, and COVID kind of showed this whole new, growth area. And now I'm like, Man, I'm kind of excited about where we're going in the future. And so I think this is real. Now, I think we're going to absolutely see corrections and bear markets again. We are. But I think the levels I thought we were going to go to in the Dow, like I thought maybe
Yeah.
we could go to 12,000, 15,000 down. I don't
Right.
think that's in the scenario.
No, yeah,
I
me
don't
too.
think
The
so.
market will continue higher. I
It
just think
will.
we
Well,
missed a
and
bit
that's
of
the
a
thing, Tian.
correction.
100%. Tian, you hit it on that. It to try to sell the stock market and to be in cash is a loser's game. We've got a century long worth of history saying that the market goes up and outperforms cash. So if you have weakness, you buy more. If you're on strength, guess what? We're going to be higher in the next 3 to 5 years. That's just the way the market works.
Yep.
I agree,
Yeah.
Tian.
Yeah, I mean, it just seems like, right now we're getting nothing more than like a 1%, 1 to 3%'s like buy the dip, buy the dip, buy the dip. I just wonder like how much longer can that actually go and sustain itself? It's a lot different. Like last year after our, COVID crash, we came back up. I thought, okay, we're going to see some reality setting back in. We just never had it. Like reality has never set back in. We have, all-time highs. We have balance sheets are again, like Tyson said, like healthy, but I guess it's like there's just so much opportunity that feels like, for the last 10 years, everyone's been waiting for that dip, and like
Another
that
thing you
big
got to think
money is
about,
big.
though, Chris,
Yeah, go ahead.
another real quick. Another thing you got to think about is one of the driving forces of this rally is people who don't necessarily need the money right now.
Right.
Right. It's the 25, 30, 35, 40 year olds that are like, geez, I missed out on a big run. Now I'm hearing about all these things, and they're investing in 401ks and doing more aggressive things. And I think that they're going to be okay with, I don't think they're going to like it, but I don't think they're going to be panicking out of a market correction, because I think they're like, well, I'm retiring at 60. I've got plenty of time.
Right.
And they should be thinking like that. Now, they haven't went through a true correction yet. So we'll have to see how this plays out. I think it'll end up okay, but it could end up really, really bad, because this is a one-sided trade right now. And if everybody gets on one side, it just takes a little bit of cracks to have that whole thing shifted another way.
Mm-hmm.
But for me and for all of us, Tian and you, Chris, if we do get the shift the other way, I'm not going to look to be super bearish and short. I'm going to look to, just like we did in March, Chris. I'm going to look for opportunities to pinpoint our entries and buy high quality stocks on the cheap.
Absolutely.
Exactly. Yes. Yeah. I don't think this correction is going to be a complete reversal.
Right.
I'll maybe short the Aussie basket and go long on the dollar for the next couple of months, but ultimately it's all going to continue in the regional trend.
Yep. Agree.
Yep. So I would, and again, so we're looking at the DIA right now. You could see that the DIA, the SPY, a lot of those, ETFs that follow the major U.S. indices. If we pull back to those February highs from last year before the COVID crash, that now becomes a really appealing level for some type of correction, and that would be
It's healthy. Yeah.
That to me is like, that's a healthy correction. How we get there is not going to seem healthy. It's going to be like, oh my gosh, everything's falling apart right now. But the technical level of this resistance becoming support is very, very obvious. So, again, I don't know what the catalyst is going to be to drive that. I don't really care, but that's what I'm looking for. And I think that is where you find great companies at, like Tyson said, on the cheap, or you find them, great companies at an on sale market cycle. And so, I mean, again, this type of correction will bring everything with it. If you look at something like a stock screener, I was in one of my live sessions this morning from my YouTube channel. If you go to like finviz.com and you look at their heat map, if you take a look, like this was literally all red this morning. Everything was red this morning as futures was down, Wall Street was opening bearish, and look what happens. Like the day has opened up and we are starting to see what? Everything is starting to fight back. So gaps are getting filled. There's still a lot of buying interest out there. It's going to keep plugging away. Now, yes, eventually this will be all red and that correction will look like the sky is falling for a little bit, but it's like the bears fall out of windows. They pull off the Band-Aid. It's just like, just make the correction as fast and as quick as possible so we can start buying it again. That's kind of the reaction that we've seen the last probably 5 or 6 years. Like every time you see these really aggressive sell-offs, you start to see these very aggressive V-bottoms. And one pattern that I will tell traders to look for is this. What happens in the stock market is you might see it sell off and then you'll get a cup and handle. So it's like you have a very aggressive sell-off, it rebounds off a V-bottom, and then you'll have a pullback. The best way to trade that is you start looking for breakouts right there. So when it breaks those highs, that's a cup and handle pattern. It's pretty much like an inverse head and shoulders, but there's no left shoulder. And that's a really common stock reversal pattern. So if you're getting, bull flags, if you're getting reversal patterns, those V bottoms are super good tells to consider, staying long and looking to stay long. But find your past level of resistance, let it become super support, and that's something like it's like 7 to 10%. If we have a sell-off right in here, we're looking at about a 7 to 10% correction. That to me is a healthy cycle to see the bulls really take over again. But at current levels, it's like, okay, keep going, I guess, keep stretching. But again, I like Tyson said, I'm definitely more bullish. I'm certainly bullish in the short term. I want to see a correction because I think, Forex will make sense a little bit more. Stocks will make sense a little bit more. I want to see some things on sale that I could buy because I got knocked out with a lot of positions. A lot of triple digit gains from last year. A lot of trailing stop losses have been hit. I'm fine with having that cash at the ready to get some strong holdings built up once again.
You know what I think is going to be interesting is I don't necessarily see a capitulation sell off in stocks. What is very interesting to me is the correlation to Bitcoin with stocks right now, and I think the capitulation move is going to be in Bitcoin going down to the mining cost. People who like, oh, it's never going down to 20,000. Yeah, I've heard that before when it went up to 19,500 in 2017, and we called out that it's going back down to 3,500 or $4,000. People were calling us crazy.
Yeah.
We were calling it out because that's the mining cost. I'm telling you, it will go back down to the mining cost, and it will not be fun when it does. So I could see the capitulation move being in Bitcoin.
Interesting. Cool. That's a good thing to watch. And
that'll be great. I'll buy more. Then
Sure.
that I'm really excited. I'll buy much more if that happens.
Right. So Tyson, do you think that there is what would you say is the strength of the correlation between like your risk appetite? Do you think that the markets need to be very strong, like risk on, risk appetite trading in order to see cryptos and Bitcoin stay at the levels it's at?
I think for now, long term,
Okay.
no. Long term, I see Bitcoin. I see them as a Bitcoin and Ethereum mostly as more of safe havens, kind of more stable assets long term. But as of right now, I think everything's going up and down together. And people are just, they're flooding into the markets and buying whatever's making money. And then when the market kind of starts to roll over, they sell everything that's losing. And it's just going through. And I think that Bitcoin is going to, because of the massive rally it's had, I think that little, sell-off days that we see in the market could be exponentially big in Bitcoin. And if that continues, we could see, if the market goes down 10%, Bitcoin could be, down, 40%.
Yeah.
And again, historically, we see those type of pullbacks. And right now, Bitcoin's boom and bust. It's never going to go bust. Take that off the table, but it is in this boom and bust cycle. So again, would I be shocked if we see 20, 25,000 again? Absolutely not. Am I calling for it? Actually, yes, I'm going to say I'm calling for it because that's the mining cost.
Yeah.
And until if the mining cost goes up, I'm going to call for whatever the mining cost is at the current time. That's where I think we can go.
Yeah. Yeah. And I know that like last week you said, we might see 100,000 before we see 20. Like that,
Exactly.
it's very possible that we might see the irrationality continue where we might see $100,000. But if that mining cost is still at 20, gets up to 22, gets up to 25, don't. And the same thing happened in 2018, right? We had about an 85% sell-off in Bitcoin. So we could
at the
overstretch.
same time that Bitcoin went from that 6,000 to 20,000, mining cost went from 1,500 to 4,000.
Yeah.
So you got to remember. So we might go to 100,000, and by the time it comes down to the mining cost, like Chris just said, mining might be 30,000 at the time.
Correct.
But it is going to hit that mining cost again. I promise.
Yep. So what we'll leave traders with this today. Any other questions that popped in here? Everything's good. Smart trader, Roy. So I would say, Roy, make sure you follow Tyson out there for LSK and EOS. Make sure you follow Tyson in his crypto portfolio. The 1.9 trillion package is already priced into the stock market. I certainly thought it was as of last year. Once the election was done and, there was a lot of election drama in the U.S. going into this year. Is it going to be a messy election? Is Biden going to be president? If not, are we pushing through a package? Look, I think that it's, priced in, but there's still a lot of optimism the market's still running with. And right now, I think that all of us are in agreement, like it is the path of least resistance. This is not a market you want to short. This is not a market you want to fight. And even if we do have a correction, I feel like we have a new breed of retail trader out there that's a little bit more risk tolerant, right? I mean, we might see a 10, 15% correction and everyone wants to buy the dip versus panicking and hitting the sell button and selling at the bottoms. Instead, they're like, I'll just buy more. And that's going to make for a very interesting dynamic in how we move forward in price. So even if it is priced in, I think that the U.S. could probably shoot itself in the foot and overdo it. I think they could say, okay, we just rolled out 1.9. Let's talk about another package. We can. I mean, I'm again, that's a whole different conversation. But
Last thing I want to say about what. So I always think about like, oh man, I'm bullish. What is going to throw this thing off? Here's how this thing all ends. Massive taxes.
Sure.
I mean, that's how this ends.
Yeah.
If we see tax rates skyrocket to pay for everything that we've just done, plus this whole, $17 trillion Green New Deal that's coming out, if we bye. I mean, then the money to invest is now evaporated.
Yep. Agree. And things to watch for, right?
And inflation. What about inflation?
Yeah, well, I mean, the way that we calculate it, it's like we don't really calculate it based on real life. We calculate it based on things that, don't really, it's like they have no influence on day to day. Like, in America, our dollar is definitely weaker. The value of our spending power is way less. And if you go to the grocery store, it is expensive. You go to the gas station, it's expensive. It's like, and again, we're spoiled in the US. We're a consumerist nation. We buy everything. But the reality is, like, our dollar's not stronger. Our dollars, I mean, our spending power is way less. But yet, like, when you look at the Fed minutes and you look at how the Fed actually, gauges inflation, they think that everything is fine right now. And, maybe it's going to let it run a little bit hot. It's like, this can't end well, but it's going to be interesting how it switches. And it might be like from current system right now to decentralization. We might have more of this digital play. Like this whole current existence of like the financial markets could change. Like this could be a big paradigm shift into something completely new. And I don't know. I mean, again, it's like, that's not for us to care. Like, I don't care about that. All I care about is today, can I be profitable? This month, can I be profitable? This year, can I be profitable? And as long as I have something to trade, that's what I care about, So, I mean, if it's that bad, then I guess I'll leave the country. If it's that good, then I'll figure out a way to stay. It's like,
Problem is, where are you gonna leave? Where are you gonna leave for? Because we're the cleanest, dirty shirt on the floor. So
I was gonna say, it's like, I mean, everyone can complain, right? I mean, we have weather cycles all over the country that are doing crazy things. You've got all sorts of different living situations all over the world. None of that matters. It's like if you're gonna go someplace, if it's that bad, then leave, right? And I'm talking worldwide. Like if it's that bad elsewhere, then try to come to the U.S. I have U.S. people want to go to Canada. U.S. people want to live abroad. Like, fine, go do it. Like, nothing's stopping you, right? But it's like everyone likes to complain. That's like my biggest hatred of social media is like everyone feels like they have this platform to, complain and raise this voice and drive all these opinions. But it's like, then do something about it. Like, take action versus just like, it's so bad. It's like, well, then change it. Like what you can control, you change. What you can't control, you deal with and tolerate. And, I certainly want to be where my money's treated best and where I have the most opportunity with it. So in the trading, as a trader, that's all we can do is like try to do whatever you can to have your money treated the best and, preserve wealth, grow wealth, generate wealth. That's all you can do. So anyway, that is a lot of stuff, segues, tangents. Like we can go into, we can put on tinfoil hats and we can talk all sorts of stuff, but that's not for today. So, Tion, Tyson, any final words to wrap up? I know we went a little bit long today, but I thought we had a great session.
Patience.
Yeah.
That's it. I love that. I think that's the closing. That's the closing statement. Patience.
Yep.
On everything.
Yep. Yeah. Agree. Rome was built in a day. Portfolios aren't from rags to riches overnight. Although you traded GameStop in January, you thought maybe that was not the case, right? Rags to riches overnight. But again, that's it's about what you can do to sustain this game. We're all traders here. We're here to, survive in the markets. We're here to keep trading, live and trade another day, keep finding good trades. And I'll go back to what we talked about earlier. If you're in trades right now that you don't like, evaluate it. The hard part is remove yourself from the equation, be objective, and see what would you do right now. What are your indicators telling you? What is the price telling you? What are your systems telling you? If you think that you want to buy low or sell high, then great. But do you have confirmation? If you do, then you can start to get in. If not, then you wait. Just like Tian said, patience. It's so important. Patience and trade size will take you a long ways in these markets. It really will. Like you can survive a long time on conservative trade sizes and patience. It's amazing. So, all right, traders, that's going to be it for us.
Don't forget to smash that like button. We've got people watching. We got 15 likes. Smash the like button.
Absolutely. We got a nice crowd today. So, look, we appreciate all the thumbs up. Click that thumbs up button for us. If you have not had the chance to subscribe to the Market Traders Institute YouTube channel, please do that. So, if you subscribe, click the notification bell, smash that like button, hit the thumbs up button for us. That goes a long way to get videos like this out there. Again, this is free education for you. We're doing this every week. Tion, thanks for coming in today. Next week, we might have Tad join us as well, but we love doing these sessions. We're talking about all the different financial markets. And again, being a trader with us, and we have always never a dull moment in the markets, and never a dull moment here at Market Traders Institute. All right, traders, that's it. Have a fantastic week, and we'll see you soon. Thanks. Bye.
Cheers.